You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little program we like to call around these parts the option block. A little bit of strategy, a little bit of your questions, some unusual activity analysis, of course, a breakdown of what's trading, a peer into the future, and you have the heady brew, also a dash of strategy, and you have the delicious cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. So many technical term fun programs for you guys to check out, including, of course, all of the archived episodes of this fine program, 550 plus now archived hours of delicious goodness for you guys to check out, as well as a lot of other cool stuff on a lot of other 15 programs on the network. Where can you find all that? Easiest place, of course, theoptionsinsider.com. While you're there, of course, breaking news in the options market. If you want UA, we got that in spades. A lot more of that over there on the website, a lot more detail than we have time to get to on the program here. Plus, we only do the show twice a week. We do UA every day over there on the website, as well as I know you guys love your hot options reports. We got those midday and end of day now, as well as a bunch of other cool stuff, education, analysis, even some future stuff over there if you're so inclined. Again, the website, the easiest place to get that, the Options Insider. And of course, if you just want to mainline the audio straight into your ear holes, then of course iTunes, TuneIn, Stitcher, now Google Play, even iHeartRadio. It's everywhere you want to be, including via the App Store, our app available for iOS, Android, and the beloved Fire OS. Just search for Options Insider. You'll find us there. And of course, however you get the show, including streaming live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr. MIXLR. If you're free, or maybe even if you're not free, if you're at your desk, you have to just cover your ears or cover your speakers, maybe put on headphones so your boss doesn't hear you. It's okay. We'll allow that. Hope you can join us there every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. And starting off, let's go far out again to see who's joining us today. It's like the guest section of Sesame Street every episode, even though it's usually the same cast of characters. I guess today, playing Snuffleupagus on the program, we have the king of umbrage himself, Mr. Rock Lobster, Andrew Giovinazzi, beaming in from the great state/principality known as Maine. Mr. Rock Lobster, welcome back to the program, sir.
You mean the guy with umbrage that didn't hit the bid this morning on his puts?
Yes, you have some umbrage there. We were talking about that before the show. Yes, we often we don't always get our trades off. Not just you listeners, we do it as well. Sometimes we get greedy, sometimes we get silly, sometimes we get busy and get preoccupied with something else, and we don't have time to hit the bid, or we just don't want to hit the bid. And we work it, and other things happen, and you miss your trade. It happens to the best of us, and the Rock Lobster is feeling that pain right now. So send your well wishes to him as we welcome on our other cohort. If you're a Snuffleupagus, I guess that makes this guy, I don't know, Cookie Monster maybe. And that would be Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. How are those delicious cookies in St. Charles, Illinois?
Cookies. I suppose I've been called worse things. I was concerned you were going to call me like Elmo or something, but I was thinking maybe Oscar the Grouch, but I do want, as the Cookie Monster, I would like to claim umbrage for you saying that my friend Andrew claims umbrage is the king of umbrage, because umbrage is something with which you cannot be king of. Umbrage is every man's God-given right, especially if you live in Maine or St. Charles.
I was leaning grouch for a little bit, then I thought that's not fair to Uncle Mike. He's not really grouchy. And you're kind of big and blue and you like cookies, so therefore it was an easy comparison. I guess I could have gone Big Bird too. They don't strike me as the bird type. So we want Cookie Monster listeners. You guys who have met Uncle Mike can weigh in as well. Meanwhile, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. And we are coming off the heels of a big, some may say overdone, but a big sell-off last Friday, of course, when all of the legion Fed governors decided to start opening their mouths last week and spooked the market into a very aggressive sell-off, giving us back some volatility into the marketplace. Realized vol leading into that had been at about 5. Implied vol was about an 11. So we weren't really sitting in the most active of marketplaces. We sold off over 1%. The first over 1% sell-off in about 52 days, I believe, over there in S&P land. So some historic times. We needed something to kickstart the market. I wish it wasn't the Fed governors. Now, of course, we have more Fed governors coming out today and tomorrow. I don't know. The legion of Fed governors who get to say their piece on this. You know my thoughts on that. I've never been a big fan. The Fed should speak with one voice. And it should be the Fed chairwoman, or chairwoman in this case. And they should speak at their meetings and maybe the other contractually obligated events she has to do. And that should really be it. All this hither and yon for no reason. I really don't care what the Boston Fed governor has to say, or the Chicago, or anywhere, all these other guys coming to these meetings and saying that. Because all it does is cause what we have now. Just all sorts of back and forth for no apparent reason. Because today, market's rallying yet again, 1.5%, pretty much erasing the lion's share of the sell-off that we had on Friday. So one Fed governor kicks you in the teeth, the other guy lifts you up, and here we are, a lot of Sturm und Drang, signifying nothing except for some more vol in the marketplace. Even today, with vol coming off on the heel of the rally, off about 2 1/3 handles out there in the VIX cash, still above the 15 handle, which is, of course, well north of where any of us prognosticated that it would be last week on our volatility views program. Most of us were in the 11 to 12 handle range. Certainly no one in the 15 or even 16. I believe it briefly broke into the 17 handle range at one point. So none of us were close at all to what was going on the upside there. But still a lot of interesting back and forth out there on the old street today. By the way, our friends over at Options House couldn't make it on the program today. They, of course, if you noticed in the news, their deal closed with E-Trade today. So that's a lot of shuffling of the deck going on over there. But we'll be back on Thursday. Don't worry if you miss those guys. By the way, if you haven't had a chance to check it out, keep an eye on their blog over there, optionhouse.com. They have just click on the blog tab, and our buddy Steve is on the show a lot here. He was writing about that as well, about the impact of some realized vol coming back into the marketplace. And they were reiterating their call for what we talked about on the show with them a couple of weeks ago. I think you guys are talking about as well, Andrew, as well. It's kind of one of our favorite strategies here on the show, which is, of course, using options as a stock replacement. They had advocated for that a couple of weeks ago when vol was cheap. Even with vol a little bit more expensive, that strategy still could be a little bit attractive, certainly compared to historical volatility levels. These are still fairly low. So if that is an interesting one, they have a write-up about that, as well as a webinar, I believe, over there, optionshouse.com. Click on the blog to learn more. I think the good thing about that, you don't have to be a client. So if you want to just check out that webinar, optionhouse.com/webinars, if you are so inclined. And you can check out that webinar over there on stock replacements, one of my favorite personal strategies out there with the old iron fly in terms of favorites. That said, let's mix it up. Let's start with you, Uncle Mike, because you are Cookie Monster fame / infamy. A lot of stuff going on. Of course, we have the will they, won't they dance of the Fed, and it seems like every single person who has anything to do with the Fed has to give their 2 cents. And now we're seeing the results of that Friday and today, and probably again tomorrow. I don't know. You're probably like me. You're kind of done with this. But still, give us your 2 cents on that, as well as whatever else is catching your eye in today's activity, sir.
Yeah, I took a few economics classes in college, so I guess that makes me a qualified Fed governor, too.
There you go.
I don't
Weigh
know.
in. Why not? Everyone else is doing it.
What the heck? So who cares at this point? The will they, won't they? Let's go, on Friday. If you just look at the market action on Friday, a lot of the belief was because the Fed, it looked like, they're going to raise rates. And then now today, no, we're not going to raise rates. And it just became a giant debacle. Here's another factor as to why I think the market did what it did on Friday and then had such a recovery today. There is the Fed issue, but here's the other thing. There's this thing called 9/11 that happened over the weekend. And so I believe that I think this is just kind of adding to the perfect storm, so to speak. On Friday, just in hindsight, and I didn't even think about on Friday so much. I was out of everything before. I guess I kind of lucked out in that I had a lot of risk off on Friday. But with that, I believe a lot of selling was happening just because, number one, you have the Fed information, but just to kind of add to it, we were going to have the 15th anniversary of 9/11 on a non-trading day. And so I think that kind of added to the fear as well. In terms of what's happening today, holy cow, I'm just going to have to go down my list. I might need extended time for this one, but not really. But just going from top to bottom, oil, holy cow, I would have loved to have been an oil day trader today. You look at oil early in the morning, it's at 44, got up as high in the mid 46s, and that's some pretty nice move for oil in one day. So oil was something else on the day. That really had a lot of pop on it. The other thing, Samsung. It's as if Samsung is just trying to help Apple in any way with which they can by putting the firecrackers in their new phone. With that, in case you haven't heard, Samsung actually decided, or they didn't decide, but in their new Galaxy Note 7, they're telling everyone, don't use it. Get rid of it as soon as possible. It explodes, and I don't think Apple could have possibly asked for anything better to happen to their competitor. So Apple's up over 2% on the day. Going down the list, gold and silver relatively flat. The S&P, what can I say? The S&P is just on. There was a bunch of Samsung phones that went under the butt of the S&P today because it lit a fire underneath it for sure, and it has just been quite the rally. We're not quite to where we were at the open on Friday, but a lot of it did come back. So with that, I mean, I do have to give kudos to Dr. George over at RCM. He put out a notice over the weekend just basically saying that this was a buying opportunity. And no, he's not just someone who calls himself the doctor of trading. He really is a medical doctor, and he's just a medical doctor turned advisor. So with that, all that's happened today, combine that with the Fed, and we had a lot going on today. With that, though, if you look at where we've been in the stock market between Thursday night and today, it's kind of like when the Viceroy went away for a while and came back. He said, wow, nothing happened while I was gone. But in reality, quite a bit did. So this is going to be an exciting week, in my opinion. Curious to see where we go from here.
Where we go is to a little weird place we like to call colloquially here as Maine, where we are joined by the Rock Lobster. Mr. Rock Lobster, what caught your eye in today's activity, aside from those aforementioned puts that continue to haunt your nightmares, as well as what was lighting it up over there in the pit shack?
The aforementioned puts, let's just say, sometimes you own puts and you own calls, and you got to sell the puts when they want them. You can't be greedy. Let's just put it that way. It's funny because we closed some volatility puts that we looked at in our strategy letter just because the vol fell. I didn't think the vol would go down this far this fast. I didn't think it was going to hold up, but I didn't think it was going to drive. UVXY was down like 350 at one point today. XIV was up almost $3 there, like 250. The XIV is harder to move. It's basically a short vol product, but it has a hard time recovering after a sharp sell off the way it's kind of structured. And I didn't think it could move this much so quickly, but it didn't stop me from wanting to fade the vol a little bit. It's just, it happened really fast. And the only thing I would think about Friday is I think the ECB somehow tried to sneak a tacit, we're going to stop buying bonds in March 2017. I still feel like they kind of said that in central banker speak, meaning we will reevaluate the program in March to see if we need to buy more, meaning they're not going to buy any more if they don't have to or something. So I thought that was part of the thing. And then, I guess the North Koreans had a nuclear test, which generally is like a couple of like kind of news events. I think liquidity just dries up. And liquidity dries up, and all of a sudden things get unbalanced, and the sellers sort of win that need to win. So, but I thought there would be some follow through, but then again, you have the kind of mildly dovish Lael, Fed chairman or Fed governor Lael. We have to be careful about this. And one of my clients who's pretty smart said, that statement was just the new Fed statement. So it's almost like they sort of put up these Fed governors to sort of, have whatever the new groupthink is, I think, about what to do with rates, although I have no way to confirm that. But VIX is 15, and 3 days ago it was 12, and this morning it was 20. So you want to talk about a wild ride? Mr. Toad's Wild Ride is now, they're going to rename it the VIX. At Disneyland, I think SIBO is officially going to just kick off the name Mr. Toad's Wild Ride and call it the VIX Ride.
It's a good branding opportunity. You should talk to those folks. I think that's better than the Cubs seats they had going, I think, for a few years there, or just the VIX. I think it said CBOE VIX on the backboards there, or the walls there at the Blackhawks games. I remember people constantly asking me, what the heck is that? They thought it was a radio station. Didn't explain, didn't say volatility, just said CBOE VIX. They thought it was the call signs for a radio station. So I had many good conversations at Blackhawks games explaining exactly what that was to random people sitting around us who wanted to know. But I like that idea of licensing Mr. Toad to Disney. I think they should look into that. Speaking of wild rides, that's a great segue to our next name. We touched on this name once or twice in the past. One of our big controversy names. We were talking before how it got his legs cut out from under it, trading south of 200, that mystical 200 level everyone's keeping an eye on. Today, rallying back close to that 200 level. This is, of course, Tesla. They of autopilot fame / infamy, rallying about 2% today, or nearly $4, closing right around 198.30. So still under that 200 level, but getting close, getting precariously close back to that level. Actually underwhelming a little bit from an options perspective. Seemed like they were going to light it up earlier in the day, but then doing about 73,000 contracts, and they've been averaging about 93, so about 20,000 or so less, than they average. About 1.5 to 1, close to it, calls over puts, which you would expect on a rally day like today. And the lion's share of that volume are pretty near term in the SEP and in the weeklies. Again, a lot of people playing close to the vest when it comes to good old Tesla. It looks like, I'm looking at the lion's share of this volume all the way down to 200 of the SEP 160 puts going up today out there as we're talking about. Of course, the autopilot, this infamous feature, they really probably shouldn't have called it autopilot because it implied a lot of functionality that simply wasn't there. And of course, as any lawyer would have told you, we're not lawyers here, but we can pretend to be some on the show, that also opened up the doors to a lot of potential liability. And we saw people getting into accidents with this feature or doing a lot of silly things like sitting in the back seat while the autopilot drove and things. Now they have an update. It's going to do a lot of the things a lot of the other manufacturers do now when you have these autonomous features enabled, including, of course, putting your hands probably where they should be on the steering wheel out there. So a lot of interesting stuff cooking out there as a result. But still, interesting to watch Tesla, this kind of back and forth. Does generate some action, some trading activity. I'm sure Mr. Rock Lobster, Tesla was once again a topic of discussion. With these, is this where you missed your puts out here in Tesla land?
No, I did not miss my puts in Tesla land. We actually looked at some kind of time spread type stuff because that, I think I'll just, whatever this opportunity is for this week, I think you want to, it feels like you want to sell this week's volatility. So we looked at all kinds of ways to do it. It's one of these, when Tesla really looks ugly, like it's kind of sold off. They're trying to buy this SCTY and, you're like, oh, I'm going to fade it. This is the time it's going to drop to 170 or something because it's such a, overvalued whatever. It almost always rallies. So I just think the uglier it looks and the this and that, make sure you buy a couple of calls just in case. Because, you can have your put time spreads, but I think without a couple of calls maybe, it might get a little dicey. There's still a lot of short interest in it. And, that always makes things a little, bouncy, a little hoppy, so to speak.
good advice to have some backup calls there just in case, because you're right. How many times have everyone been burned on this? It's dead, it's below 200. Oh no, it's back. Oh no, it's dead again. It's back. Makes all those puts attractive. Hence why people are trading the 160 puts today. An interesting strike, nearly 40 handles out of the money with about a week or so to go. But still, a lot of interesting paper lighting it up out there today. This is one we could probably go on at length. And I'm sure we will again, maybe even later in the show. I'm sure you guys probably have some questions about this one. But meanwhile, let's keep on rolling into my own personal favorite segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune. Not quite as funky as our Twifo theme, but still pretty funky. As, of course, the signal that it is time to don your fedoras and your trench coats, just like a little guy on the website does, as we venture into the forbidden area, the forbidden zone of the options market. Let's kick things off. Let's see, where should we start? Let's start in the realm of all things precious metals, shiny stuff, my precious. In particular, let's start Gold Fields Ltd, ticker symbol GFI. This is an ADR if you're not familiar with them. They are, as the name implies, yet another gold mining company. Closing today, like I said, ticker GFI, closing about $5.25, not $525, listeners. No, about $5.21. Up about 3% on the day. It still doesn't mean much, only 15 cents. This is our resident cheapie. And that didn't catch your eye. This May does about an average about 2,600 contracts a day on average, which is not bad for a cheapie name. Today doing 57,600, 371 to 1 calls over puts. That, listeners, should bring to your attention what's going on. If that wasn't enough, you just bring up their option chain out here in GFI and you'll see it. It's going to jump off the page at you. There is effectively one strike in any month that's of relevance in terms of open interest. And guess what strike traded today? Yes, it was that one. It was the Ox 6s, the October 6 calls, lighting it up today to the tune of 56,137 contracts here. Paper just gobbling up. The print went up late. Of that 56,000, one block was 55,118. So I think you can call that a sizable block, just about however you break that up. One print on ARCA for 18 cents. Went up out of sequence, as happens to do with some of these lesser liquid names. They didn't put up the paper in time. But it did, even still out of sequence, it posted through the offer. Not a surprise, given how illiquid this name was. And surprise, surprise, there is about 56,113 contracts open on this strike, 56,137 total going up on the day. So just perhaps, just maybe, the hint, the whiff of closing activity out here. Again, paper buying these through the offer for 18 cents. Mr. Rock Lobster, I don't know about you, but to me, when I see something along those lines, huge size through the offer, paying 18 cents, that to me has the whiff of someone perhaps making some money, closing out a short, and is happy to do that, and is happy to give up a few cents. Do you concur, sir?
I have to say, I'd like to argue with you, but I can't on this one. It just the block is big, the open interest is big, and all these little gold names have dropped off from some pretty high levels. It was just 660, So if they would have, let's say they write that call for $1 against stock. After that big run up, I was still looking. There's a big block print on. There's a lot of. I'm looking because there's a lot of 4.5 puts are going up. There's a couple of really big volume days. I was trying to find. I'll keep looking for it here. I was trying to find the print, because 55,000 lot usually kind of stands out a little bit. But I think I think they wrote something. I think they made some money, and I think they're closing, and they're saying, thank you. Yeah, the OX6 calls, they were sellers of these things. Average prices around 50 cents on bulky size, huge size. So if they're buy writing them, they're saying, I think I'll just take it now and go. Thanks. That's not bad though. That's 32 cents or almost, that's at least 30 cents 50,000 times.
I would take that. I wouldn't sweat that one. Yeah, there's a few tells that we develop having done this for a while, and you too can play at home, listeners, if you are so inclined. A few tells that indicate when someone's sitting on some house money, and this is usually one of them. A big size, one print, lifting or going, in this case, through the offer that shows they're not that concerned about the price. It could be the other way, too. It could be they're getting the tap on the shoulder they have to close out because it's so in their face, but a quick bit of research will show you that is indeed not the case. This is usually another tell for that is, of course, when they roll up and out, and they usually do more size on the out leg, second leg. That's usually a good sign that, hey, they made some money, they're sitting on it, they don't mind swinging for the fences for even more size. Yet again, when they do it the opposite way, when they do less size, usually a good tell that things perhaps not going their way. Speaking of things going or not going their way, let's check in and see how this trade's going with our friends over there at Southwest Energy Company, not Southwest Airlines, Southwest Energy Company, ticker symbol SWN. Closing today, decent little rally for them, pretty much moving in lockstep with the street, up about 1.5%, closing just a wee bit under $15 today, $14.94. To be precise, it's the name that does about 10,000 contracts a day, doing about that number again today. So again, listeners, it's not always just size volume that catches our eye, but more often a unique snowflake amongst the blizzard that catches our attention. In this case, it was pretty, let's say very short-term call activity out here in SWN. In particular, the SEP, regular SEP, so these are effectively weeklies right now, going out the end of the week here on the 16th, going up, paper gobbling those up, started off small, just 250, but as the day went on, they started to alert on our radar even more as more size started piling to the tune of, as the day went out, about 5,260 of these calls going up. They started buying them in that first block of 250 for 25 cents. They got all the way up to 29 cents and even more. These calls actually went out 34 cents at 39. So I'm guessing the latter kind was not perhaps as favorable. There is some size open interest on the strike, about 20,000 contracts open. So it could be perhaps, again, this is the 15 strike stock rallying today. So it could be someone panicking to take off a close. And that could certainly make sense, seeing it rally towards a strike, getting a little bit nervous, don't want to carry them all week, taking them off. Or it could be the other way entirely. Could be someone deciding to pile in to more of this open interest here, deciding 20,000. That's not enough. I really want 25. And looking back at the last 6 months or so out here in SWN, this thing has been pretty range bound since early summer, since about May, when it's kind of been vacillating in this 13 to the upper bound, about 15.5 range. It's kind of right in the middle to upper portion of that band right now. Either way, if this is piling in, our friend's thinking this thing's going to rally hard north of the 15 handle, or if he's closing, he's concerned about that. Either way, he is thinking about a continued rally north of the 15 handle by the end of the week. Mr. Rock Lobster, what say you on this pretty frantic paper going up here today? This got the whiff of closing to me. Do you feel the same way as well?
Yeah, I do. I feel like this is it's almost like the calm before the storm in some of these energy names, because we had, like Mike said, that big bounce in oil. A lot of these things, I think, like XOP, I know Mike like XLE, but XOP has been like the big laggard. I know it has the kind of the riskier, E&P names in it. It's just this one of these companies that looks like, people are starting to close some short calls. They got the sell-off, they got the pullback, and history is not kind to those who don't close some of the short calls. You're like, okay, it's 50 cents, it's 18 cents, it's 20 cents, and and then you get some goofball lift, which when the market feels like this does feel like a kind of a thin market where the stock could be taken up a buck, and then you're angry. You're angry at yourself. So I feel like this is some closing. I feel like this is some closing paper in this name. That's what I would say here. But usually, a lot of this closing has been pretty good sign for things sort of moving in that direction. Usually these are funds and watchers of the name, holders of the stock. They follow it and they're like, okay, well, I'm going to close these calls and I'm going to move on. So that's what the paper appears to be. So we'll see tomorrow. If that open interest jumps a bunch, we'll know that they're doing a little giddy up for next week. So I don't remember if there's tons of oil related news coming out, but oil and financials have been looking relatively good. The two kind of stink pot names of the year are all of a sudden looking okay going into the end of the year.
There's always oil-related news. They're like Fed governors, the Saudi princes and Russians, and there's always some oil magnate willing to pontificate at length on it. It's like as many Fed governors as there are even more people with skin in the oil game. So yeah, there's always Fed news, Fed comments to parse, oil comments to parse, and it's, if anything, it's worse than the Fed scene, which at least we have a finite number of governors. All right, moving on to our final name, our final victim out here in good old odd block territory. This is HCA Holdings. Let's see, ticker symbol, appropriately enough, HCA. Mr. Rock Lobster knows how I like those ones that have appropriate ticker symbols. Closing today right around $77 even. Again, moving in lockstep with the market, up about 1.5%. If you're not familiar with these guys, they are a healthcare services company that averages about 1,600 contracts a day. Today, doing just a tick under 34,000 contracts, so quite a bit more. 68-1 puts over calls. That should give you some inclination of what caught our eye today. And that wasn't enough. Just scroll on through your options chain, listeners. This one will jump off the page at you as well. It was the OC 70 puts that caught our attention. In particular, someone just blasting those bad boys out, drawing a fairly aggressive line in the sand here, saying this far, no further on the OC 70 strike, or just the 70 price in general. Blasting those out, starting with 15,467 for 65 cents. That went up in one block over there on the Philly. As the day went on, a little more than 2x, piling in to the tune of 32,784 contracts total on the day. We saw other prints going up for 60 cents. We saw prints going up for 50 cents. They went out 45 cents at 55 cents. So the combo of all this aggressive selling activity on the stock rallying took a little bit of the meat off the bone there on those puts. The 65 cent kind certainly looking pretty good at the end of the day here, about a 15 to 20 cent window depending on how you're pricing that bad boy is up. Either way, only 51 contracts open. Doesn't take an options Karnak here to intuit what was going on here. It's a clearly opening paper here, and someone's saying, you know what, Mr. Rock Lobster, if this here HCA drops below that 70 handle, I might buy some of that there stock. That just looks a little bit tasty. Looking back over the last 6 months or so out here in HCA land, and it has been north of that 70 handle for the better part of the last 6 months. You go a little bit farther back into the early frothy part of the year, back into the February timeframe, and it was south of that level, getting down as low as about 63, 62.5 actually at one point here. So it has gotten a little bit south of that level. Our friend here, though, not too concerned, saying if he wants to pick it up somewhere in a 69 and change range, he's willing to do it. And willing to do it for a fair number of contracts. Mr. Rock Lobster, take us home. I should say a fair number of shares. Mr. Rock Lobster, take us home on our friend here drawing a pretty big line in the sand in HCA.
I think this is the odd block of Big Daddy size. The thing never does anything.
Big Daddy block. We'll change the name.
And then somebody's let go 2 huge blocks of puts. So I can only, again, I had to look at the beginning of the day, when the market, VIX was up, vol was up, everything was kind of spooky. Those puts opened, I think 70, 110, 70 bid when I was looking through time and sales. And then boom. And then they weren't 70 bid anymore. They were aggressively trying to get these blocks put up. So I think just some fund, maybe a healthcare fund, just wants to own the stock at 70. They're happy with that. And in the meantime, they're not thinking there's a lot of rally, or they get it at a 10% discount, which probably would be fine. So they will take that return. I mean, it's not a great return on $70, but just especially because it is, you still are margin depending on the margin treatment they get, but it probably at this point looks like it will make them money. But you think about it, you just blast away at that 70 level put, you take in 65 or 60 cents, and you still have October coming up. It's sort of, that's definitely blowing off whatever wins they saw this last couple days. That's a snub in the market's direction. Like, you know what? I'll just sell a bunch of puts into you, and you could. I was going to say something not really appropriate. You could take my puts and shove them, and off they went.
They did shove those indeed. They shoved quite a few down the throats of the market makers out there. So someone, or quite a few someones, are choking on a few OC 70 puts right now out there. So if you'd like to buy some, I'm sure they would perhaps be inclined to oblige you. Meanwhile, speaking of obliging people, we're going to oblige you guys. It's Monday. That means it's time for you guys to take the reins with some questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the man said, this is the portion of the story, or portion of the show, really, where you guys get to take the reins with your questions, your comments, your nuggets, your sharp-pointed barbs, all aimed in our general direction. The easiest way to hit us up, if you're streaming live, hit us up via Mixler. You can get right on the show a little bit faster that way because we can filter those a little bit easier. You can also hit us up via Twitter if you DM or mention us there on your tweet. We'll usually see it sometime before the show is done, or you can hit us the old-fashioned way, questions at theoptionsinsider.com, as well as via our website feedback form. It's all there as well, theoptionsinsider.com to do that. And, of course, it's all baked into the mobile app as well. You can also use Facebook. We don't hold it against your stock twits. For whatever reason, people like to use the Twitters more than the Facebook when it comes to answering or asking questions. But whatever your platform of choice is, hit us up. We love to hear from you guys. Let's start off, see how many we can get to today here on the program. This first one coming in from JDiggs. He wants to know what's up with the Uber IPO. This looks like Mr. Rock Lobster. His language here. It says they crapped away over $1 billion in the first half of this year already. I can't wait to buy puts on them, although I guess those puts would probably be pretty pricey since I can't be the only one who thinks these numbers are crazy. If you're not familiar with what he's talking about, listeners, Uber, I'm sure you're familiar with Uber, and they haven't gone public because, quite frankly, they haven't needed to. Why do you go public? Well, primarily to raise capital, and they've had no shortage of people lining up to pay them extreme amounts of money in the billions with a B over and over again, multiple rounds of venture they're raising for relatively little or relatively impressive valuations and relatively little chunks of the cap of the company. So if they can do that, why do they need to go public and deal with all the legion of headaches that we see here in terms of having to deal with analysts and public disclosure and everything else like that? They've already gone effectively quasi-public, just to a different market that makes it difficult for you guys to access. Not really the public open market, but the secondary market out there instead. And so, yeah, they've raised, I forgot how many billions with a B they've raised. So at that point, they don't really need to go public unless, of course, some of those investors eventually start clamoring for an exit, in which case maybe the IPO may become on the table after all. I can commiserate with the logic of wanting to buy some puts on them. I do also agree. I think those puts would be a fair bit juicy. We've talked about this before on the program, the way IPOs work, and in general, a lot of times there is a fair bit of juice to those puts on any given IPO, because usually the options don't come online usually until the first couple of weeks after the IPO, once the stock is optionable. And usually still there are some liquidity issues. Maybe the full float hasn't rolled out yet. So people tend to, for a lot of the high profile names, like to come in and gobble up those puts. And there's also a lot of mixed pricing going on in those, and issues we talked about before with the puts being rich immediately once the options are listed. That tends to settle out after a week or so, maybe even less, and we see those puts start to come in line a little bit. But I agree, if you do pile in that first week or so of Uber puts, if and when this proverbial IPO happens, they will probably be fairly rich, because you and just about everybody else out there is thinking maybe they're a wee bit rich. I don't know. Mr. Uncle Mike, we'll start with you. Any thoughts here? I know Uber isn't public, but would this be one of your strategic night holdings if it was, and would you want to buy some puts on them?
You know, it might be a holding after it came down a bit. I'm a big fan of Uber. I actually know a person that actually refuses to buy a car because it's more cost effective for him to just use Uber. And I'm sure there's a lot of people like that in the big cities, but Andrew and I don't hang out with such folk too much. But nonetheless, I think that once it does, if it does go public, I could see it kind of going the way of Facebook, and then just having such insane amount of hype to it, and then just getting killed. And then at that point, after everyone sells their shares from the investment, then at that point I could see it possibly being a strategic night holding in some way, shape, or form. But until then, I don't see that happening. It is interesting how they have kind of gone pseudo-public, and just with the way things are in Silicon Valley, that might not be something that's all too uncommon in the near future. Just with things like Uber that are coming out, people are investing in them like that. And if that's the case, it wouldn't surprise me if that continues to happen. And then once that you get enough people in and people want to start selling, well, at that point you go public and rip off the general public and then start over, so to speak. Gotta love America.
Yeah. Get the bigger sucker involved, right? And that usually, unfortunately, is the retail public. People say the same thing about Facebook. Their secondary market valuations were insane. They were ridiculous. And people like firms like Microsoft and others were buying in at absurd valuations. And then guess what? The IPO comes along and the retail public gobbles them up at even higher valuations. And of course, looking at where we are right now, those valuations continue to soar and to skyrocket. Who knows, maybe Uber will pull a little bait and switch the way Facebook did as well. Moving on to our next question here. This comes from Beggs. I guess that's how you, maybe that's written wrong, I don't know, but we'll go for Beggs. He, or perhaps she, asks, when the ES, so of course the big S&P 500 futures and options over there at CME, when the ES shoots up, and I'm going to interpret a little bit, there are maybe a few, some grammatical errors here. I'm going to interpret what they're saying. When the ES shoots up and is at an all-time high in the summer, or on top of this Monday's afternoon, this is a hard one I'm going to interpret. I think this came in right after the non-farms a couple of weeks ago. Or on top of this Monday's afternoon, non-farms are slow, it was very likely Monday would be thin in the market. Is it possible to sell premiums, plural, I like that, when this happens and make money on quiet Monday? So let me see if I can interpret this a little bit. He's or she is asking, after something like the non-farms comes out and the market, at least they intuit or interpret, was fairly quiet coming out of the non-farms number. Maybe they thought it was going to be a little more topsy-turvy than it was. Maybe they thought that was going to intuit that the following Monday would be very thin, and as a result, they wanted to sell some puts going into that Friday afternoon and hopefully collect on that juice over the weekend. You know, Mr. Rock Lobster, this sounds like a perfect one for you because it's completely all over the place, just like you. No, this is the topic we've obviously discussed many times here on the program. This was, the de facto trade for a long time, kind of those weekend puts. Everyone will blast out premium going into the weekend. We talked about this many times on the show here, particularly in the advent of the weeklies and the weekly era, how in the early days of weeklies, people would just crush those things so aggressively going into a weekend, particularly a long holiday weekend, that it almost became attractive to buy them, and that there still is that debate there going into the Friday afternoon, whether you want to buy or not buy rather than sell. But that said, Mr. Rock Lobster, what do you have to say here to our friend Beggs, who thinks that on event days like a non-farms that the market's quiet, or maybe on any given Friday as well, he could blast out some puts in the afternoon and take advantage of what he terms thin markets the following Monday to close them out.
Well, the CBOE just listed those daily options. There's Monday and Wednesday options now, right? So I think what you could have is it's a one and done one way or the other. But actually, I had some clients trying to sell put spreads in the SPX on Friday for the options that expired today, and they turned out to be pretty good sales because they all went out worthless. But that is a way I would say to do it, because there's really no reinflation of the option premium when they're going to expire one day. I mean, they can if the market does something really, it moves huge, but a lot of liquidity providers, most of the liquidity providers start to take the weekend out, sometimes as early as Wednesday. They start decaying options, accelerate the decay by pressing forward the theoretical date. So those options get cheaper, and they try to kind of quietly decay away most of the weekend. So you could end up selling options on a Friday that aren't going to decay a whole bunch by Monday. Decay some, but not near as much as you think. If you get any kind of move, it's not going to happen. Options that are going to expire on Monday, though, I mean, they either got to make it or they don't. So you could do that, but the liquidity providers have figured out that if you sell options on a Friday, they're not going to give you 2 free days. What you can look for, though, is if the market, like on Friday of this week, bid up the options to such a degree, it's almost like they stuffed the weekend back in, and there was massive decay of options over the weekend. I was looking at some puts that were $9 closed on Friday, and these are out of the money puts, and they were $3.50 after about an hour and a half into the close. So they certainly jacked that stuff up, and they just as quickly unjacked it on midday Monday.
Unjacked, technical term. I like that. But you're right. We haven't really seen a lot of, we have a little bit more on the Wednesdays now. The Mondays are still pretty new. But those will be interesting contracts to watch because they very much cater to that weekend type of trader. And, that's just something we've advocated for a long time here on the program. To keep your powder dry maybe on those long weekends is tempting, or even on any weekend, going into the late afternoon thinking you're going to sell that and put one over on the market makers and I'm going to get a free 2 days worth of decay out of this for nothing. At that point, mid to late afternoon, depending, they start taking that weekend out at various times. On a non-farms day, they're going to wait until the afternoon, at least after the number. On a non-farms week, it's a quiet summer period, maybe you might start coming out Thursday or even earlier sometimes. So yeah, market makers aren't fools. They're not going to have you stick them with a whole bunch of decay for nothing over the weekend. So if you sell it on that Friday afternoon, you might effectively be selling it on Monday's prices, or depending on how aggressive they get, maybe even to Tuesdays, in which case sometimes we see that little bit of Monday pop back into some premium because they kind of overdid it on the weekend. The weekend bump, give them the weekend back, call it what you will. So how many times have we gotten people writing in about that, saying, I sold puts or calls or whatever on a Friday, and then that Monday, vol popped a little bit. How come? What happened? And how come I'm losing money on this trade? And that's exactly why they sold it into the next week. They effectively gave away a weekend's worth of risk without appropriate reward. Not a path you want to trod to long-term success. Uncle Mike, any thoughts here for our friend Mr. or Mrs. Beggs wants to blast out some premium going into weekends?
Yeah, I'm typically not a fan of going into weekends. In fact, I'm probably the most long-term guy of all of us on this show, and I try as best as I can to have as minimal short premium risk as possible over the weekends. It's going to happen sometimes. And I'm not saying that I never have any risk over the weekends, but I try my best to stay away from it, just for reasons that if something bad happens on a Saturday, then I have absolutely no control over it whatsoever. So I typically tend to shy away from it because of the fact that more times than not only is it not worth it from the standpoint of the market makers or not the market makers, but just of the market taking the reward out of it. But I just don't think it's worth it just because of the surprise factor that could happen over the weekend. I've just seen too many bad things happen over the weekend, or good things if you're on the short side of the market, to make it worthwhile. I'm also interested to see how the new Wednesday and the midweek options and the Spider and SPY work out. I haven't traded one yet, but curious to see how they work. I'm excited about them. I think that it's going to, once they get enough liquidity in them, I think they're going to be a wonderful thing. And I hope that it's not going to be like the weeklies were when they first came out, to where you had a 1 week and then a 2 week and then like nothing till the following month. I thought that was really a mistake with how they did that. But what I like about what I'm seeing here is that with these Wednesday options, at least in SPY, we're seeing them on Wednesdays several weeks out. And I think that's a step in the right direction. And I think it's going to be a good thing for trading in general.
Couldn't agree more. More options, pun intended, out there in the marketplace is a good thing for everybody. All right, that's going to do it for the mail block today. Keep those questions coming. We love to hear from you guys via Mixlr, via Twitter, Facebook, Stock Twits, all the other usual suspects, as well as, of course, via email and our website as well. We love to get all of them as we keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. This is indeed the portion of the program where we give you a hint, a glimpse into what we're watching for the rest of the week here. An interesting week, as we kind of alluded to at the top of the show. We have this will they, won't they dance, this back and forth between the dovish and the hawkish Fed governors. I really am not a fan of this playing out in the public spectrum, the public forum. They really should have this debate where it belongs, in the Fed boardroom, and then have the results play out in the public spectrum rather than having all this. I mean, this is pretty much a year now we've been dealing with this, guys. It started about getting into early Q3 last year, where the Fed started peeking their head out from under the blanket and saying, hey, maybe we'll do something here. And as a result, we saw a clear and demonstrable injection of volatility into the marketplace. I'm an options guy. I love volatility as much as the next guy, but not when it's kind of unwarranted froth for no reason. And that's kind of what we saw a lot of towards the end of last year and even into this year, where the Fed was unnecessarily heating up the market and causing a lot of turmoil. At the end of the year, what do we have? We had a modest rate increase just to kind of say they did it, and they almost immediately talked about dialing that back as the specter of Brexit started appearing on the horizon. So a lot of weird stuff, a lot of back and forth going on this week. We'll know more, of course, next week when the Fed actually comes together and puts their head together. There are some numbers on the docket for this week. We got PPI and jobless claims and retail sales and consumer sentiments. So for those of you who are hardcore into the data, you have some numbers to crunch if you want to ignore what various Fed governors are saying and letting their debate play out in the public sphere. We're not really into earnings season much anymore. There's not really any big names worth speaking of here in terms of earnings. So instead, let's look ahead. I also have some weeklies playing out. We'll start talking about those. Talk about those a little bit on vol views, of course, those new Wednesday and indeed the newer Monday weeklies. Might be time to start parsing those a little bit too and seeing how they're playing out in relation to all these large and interesting macro events we have coming up on the horizon. But speaking of which, let's start with you, Senior/Uncle Mike. What, if anything, is catching your eye for the rest of this week, sir?
Well, I don't know about this week, but just to add to what you're saying about those Wednesday options, I can't wait to see the action in the Wednesday options the next time that there's going to be a Fed announcement on a Wednesday. I think that's going to be just fascinating to watch. And, the concern that I would have is that the bid-ask spread goes to like $1 million between the bid and the ask, but still curious to see what the action of something like that is during the day and how it's going to play out. So that's one thing, even though I guess it's technically not this week, so I'm cheating. I'm getting a little bit ahead of myself. But the other thing that I want to watch is bonds. TLT did get pounded on Friday. But with that, it didn't really move a lot today. So I'm kind of curious to see what bonds have to say about all this in the coming days.
$1 million bid-ask spread. I would like to see that play out in the marketplace. That would be an interesting talking point for a show that day. But you're right, of course. They launched the Wednesday weeklies really to coincide with VIX and all of the settlement issues out there and the way that product kind of goes out. But you're right, it makes a lot of sense from a Fed perspective as well. A lot of Fed meetings, everything else coming up on a Wednesday. So who knows? Maybe acting for the VIX may actually work out well for the Fed as well. And we know it's just a matter of time until Thursday weeklies. They don't have a great ring, so you have to come up with something else for Thursday weeklies as well as Tuesday weeklies. And pretty soon we have the whole strip for the whole week going forward. Then it won't matter what day the Fed comes out on or anything else, there will be a weekly/daily there for you guys to trade it. All right, Mr. Rock Lobster, same question for you. What are you looking to ahead? And speaking of looking forward to things, are the people in your pit chat, are they really excited about the addition of these weeklies? Are they starting to look at them and trade them a little bit?
Well, I'm saving something, but I think, yes, they're starting to look at them. I'm just watching how they price and kind of decay. I know they're a one-day option essentially, or they're a 3-day option. So I am watching them. I'm looking at them obviously mostly from the sell side, but I'm trying to figure out when cheap is cheap on these things, when they get that cheap, because normally, as Mr. Schlesinger would say, they could be cheap enough for you, they're not to be sold. So yes, I think they are driving some interest. I'm going to guess that, probably within a year, we're going to see these things on a lot of the more liquid ETFs and equities too. I'm guessing because, heck, they're handy. So I think anything that you can create more spreads with will add a lot. People will be more interested in it. And, there's more time spreads, more short-term time spreads. Trades where you can try to grab that premium but don't have all the risk of just trying to naked sell an option, and time spreads, especially with the volatility we've had, can be darn right handy when the vol gets low. So yes, there is interest in them, but it's as any new product, I kind of look at it for a while first and try to figure it out, and we'll be and I guess we'll talk about that at the end here of the show about our little webinar we have coming up. So a little birdie can tell them something.
I thought the birds worked for option block.
I do, but
yes,
you know what you do? You borrow them, because when you live in Maine, there's so many birds.
Or crickets.
That makes sense.
Or crickets, as we've learned on some recent episodes, crickets invading the Rock Lobster's office. Well, that music means we come to the end of yet another epic journey through the world of options here on the option block today. Started off debating about the Fed, and then talking about VIX. Had a segue through some more volatility talk, got into Tesla and a few other names, Samsung and others. Got into, of course, UA on a bunch of fun names, including GFI and Southwest Energy, and HCA. And then, of course, had a bunch of your questions about Uber and writing puts into weekends and all sorts of fun stuff. And then ended the show debating about the Fed yet again. But as you can tell, he is chomping at the bit to plug something, listeners. So let's check back in with the Rock Lobster and see exactly what the heck he's tripping over himself to talk about here.
As I trip over myself, the 24th of September, Saturday class, we will be talking about very, very short-term options. Decay characteristics, spreading, how flies work, just stuff like that. Because we're, like I said, getting some interest in them. And I think people want to know, for all Option Pit Live and above members, it's free stuff. For all of you that are new, you got to pay us some money, but it's never very much.
An eighth on a 10 lot, is that what you guys say?
Exactly. It's an eighth on a 10 lot, which is not bad for getting some learning. Almost everybody like, okay, that at least saved me an eighth on a 10 lot, at least. Even though they don't know what an eighth is, but they figure they save that much money.
All right, sir. Thanks for sharing optionpit.com to learn more and to register for that webinar. And, of course, we're also joined by Uncle Mike. Uncle Mike, what's cooking in the land of RCM alts, as you guys call it now, as well as how do if I too want to go along, where do I go to learn about such things?
Oh, you can go a lot of places, but the first place, if you want to learn to go long, go to Amazon and check out my book, Go Long, New Option Strategies for Buy and Hold Investors. It's for your Kindle. So make sure you check that out. It's for less than an eighth of a Starbucks 8 lot, I guess. This may be what you can say. I don't know. I got to figure out a good tagline like Andrews. I can't top it. It's that good. But also, the fact that we are going to be having these semi-weeklies and weeklies on Mondays and Wednesdays, it's going to rack up in trading commissions. So if you'd like to have the trading commissions of what a over $100 million firm such as RCM gets at a TD Ameritrade or at an Interactive Brokers. We'd have a small fee for that, of course, but for a lot of people it works out well. If you're interested in trading through our umbrella at either of those firms, feel free to contact me and we can discuss it. For a lot of people it works out, and the best part is you get a little bit of advice to go along with it as well. You can reach me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com if you'd like more information.
There you go, listeners. Hit them up if you are so inclined. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, thank all of you out there in the listening audience for downloading and streaming and subscribing, and of course for tuning in live. We'd love to see you guys in the Mixler room as well. We're experimenting with some ways to augment the live, maybe beaming into some chat rooms and some other cool stuff. So we'll keep you in tune for that to let more of you out there who don't use Mixler also be able to enjoy the program. It's kind of been a fun little pilot for us, but a lot of you guys clearly seem to like it, so we're working on some ideas to expand it for you guys. And so we'll see you guys next. Actually, I won't be here. I will be in New York talking all things precious metals with the CME, but my rest of my goon squad here will be hosting the show. So they'll see you on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.